Hello family, thank you for tuning into this video today. Hey look, I've got something super exciting for you guys where I'm going to take a look at now the top 5 hottest suburbs in Rockhampton. You may have tuned in before and watched my other videos in other markets like Mackay and Bundaberg, and now today we're going to look under the hood of Rockhampton and see what's exactly going on there and which suburbs are in very hot demand right now from home buyers and investors. So I suppose if you are an investor and you may have been looking into investing in a market like Rockhampton, I think you're going to get some tremendous insight as to what's going to be covered here today. I think it's going to really help you go on and navigate the marketplace a lot more easier. And at the same time, if you're just an investor looking at regional Queensland in general and Rockhampton wasn't necessarily on your radar, I think you're going to get some good insight as to what Rockhampton might have to offer here and why some of these suburbs are really good value right now. All right, before we dive in, guys, I'm going to give the business a bit of a plug here. So my name is Troy Simbassini. I am the owner and lead buyer's agent of Capricorn Life Buyers Agency. Capricorn Life Buyers Agency is one of our subsidiary brands under the Life group of companies. So we've got Capricorn Life servicing the central Queensland area, Rockhampton, Mackay, Gladstone and Bundaberg. Then we've got Tropical Life up in Cairns and Townsville as well, servicing the North Queensland area. So we have the ability to buy property for you anywhere from pretty much Bundaberg all the way through to Cairns and Port Douglas, so along that Queensland East Coast. So we've got a really big regional Queensland focus. That's our market specialisation. And look, we buy a lot of property for a lot of people, home buyers and investors, and yeah, we've done more than $200 million worth of transactions. If you are a buyer, I suppose, that falls into any of these categories, I think it might be worthwhile having a chat potentially to me and my team. We might be able to give you a hand, help you get into the marketplace. You can visit us on that website here or give us a call on this number. And look, guys, very shortly, we'll also be launching an asset management division. So Life Asset Management will be launching shortly as well. So we might, if you don't use us to help you buy a property, if you don't need help buying a property at all, but you get really good insight from the information that we put out, and you are looking for someone to potentially manage an asset after you bought it, then yeah, please consider Life Asset Management, which will be launching shortly. But yeah, guys, that's the business there. Cheers. Now let's dive straight into these 5 suburbs. Hey, starting off with a suburb in Rockhampton called West Rockhampton. So for those that don't know, like let's say the geography of Rockhampton, you've got sort of a clustering of suburbs that sit on the south side of the Fitzroy River. Then you've got a clustering of suburbs that sit on the north side of the Fitzroy River. And West Rockhampton sits on the southwest side of Rockhampton, hence why it's called West Rockhampton. And for those that are familiar with the Rockhampton Airport, it's kind of pretty much sits adjacent to the Rockhampton Airport. And West Rockhampton, if we had a look at this as a suburb here, you can get an idea of the suburb overall in terms of its profile. So it currently has a median house price of $398,000. It has roughly 950 households, so it's actually one of the smaller suburbs in relation to sort of the broader Rockhampton suburb makeup. So it's one of the smaller suburbs. In terms of owner-occupier percentages, it's actually really nice. So up around that 67%. Generally, anything above 65% really is a good suburb to potentially invest in, because those markets with a higher portion of owner-occupiers generally create more market stability. It has a median rent of $460 per week, so the rents are very strong here as well. The vacancy rate, as you can see, is very tight in this suburb, sitting at 0.3%. And the yield based on the existing purchase price and rent currently sits at 6%. So if you're buying the typical property of around $398,000 in this market and you're getting the typical return of $460, you're getting a rental yield of around 6%, which is a very good return across the marketplace here. Very hard to get a 6% yield in general. But in West Rockhampton, it's very much possible if you're getting that $460 per week and you're buying at that median house price. But just to speak more broadly on West Rockhampton, so it has properties that sell up to almost $1 million. In some cases, it's a very gentrifying market now, and it's close to some pretty good public amenity on that south side of Rockhampton near the the Rockhampton Hospital, a couple of the private schools as well in the immediate area, and has some really nice elevated parts of the suburb as well, with great outlook towards the west as well. And it tends to be quite a popular suburb now for those that are generally priced out of its neighbouring suburbs in the range, which has been a very upmarket area in Rockhampton. But what we're starting to now see is a lot of that demographic change happening in West Rockhampton, where a lot of people that are priced out of the range moving into this suburb. Hence why this median house price has surged over the last 12 months. So going through as to some of the sort of points around why this has been one of the hottest suburbs in Rockhampton right now. Number one, it's had a median house price surge of 19% in the last 12 months. So it's increased from $322,000 all the way up to $398,000 there. So a total gain of $76,000. And if you actually have a look at this median house price now, currently sitting at $398,000, that's still a very cheap and affordable market relative to some of the other more blue chip suburbs in Rockhampton and places like Frenchville and the Range. The Range are looking at a median house price of around $550 now to get in. It's one of its neighbouring suburbs. So look, it's very cheap relative to the immediate area as well. And it's come off an extremely low base. And I think this median house price at $398,000, if you can buy a house around that median house price point of view, I think that's got a lot of wiggle room to grow, even up to that $500,000 median, even in the next 12 months. I think it almost has another $100,000 worth in it in the short term. But look, guys, this is just my own opinion, but take that with a grain of salt. But I think, yeah, that's still got a lot of wiggle room to move there as well, given what's happening in the area, given the demographic change, given the proximity to really good amenity. I think West Rockhampton has a lot to offer there. So that's made it one of the hottest suburbs in Rocky at the moment. The median house price growth it's had. As you can see here, demand and supply levels are very good as well. So days on market is currently at 27 days. So properties are selling there very, very fast. So the market's red hot. Things aren't lasting there long at all, sitting well under 30 days, which means that most things are going under contract in West Rockhampton in the first 1 to sort of 5 days. So you have to be very fast if you do plan to buy an investment in this area. And as you can see, it's actually maintained this trend for the last 12 months. So it's been a really hot suburb now for the last 12 months, hence why it's done so well over the last 12 months. So demand levels are looking good there. Stock on market sitting at 0.3%, so well under 1%. Stock levels and inventory levels sitting at 1 month. So when you have high demand, low levels of stock, it creates an imbalance between supply and demand, and that puts upward pressure on house prices. And this is exactly what's happening in West Rockhampton. So you've got demand really strong and supply really low, and at a fundamental level, that's what you want to see in a suburb to get that capital growth, particularly in the short term, looking at this point in time data. The other data metrics here are looking very strong as well, and this is demand side data. You can see here that on realestate.com, it's had a number of unique views per listing, sitting at 473 unique views per listing. And given that there's only really, it's a smaller suburb as well, with not a large amount of households available for purchase at any given time. So the larger suburbs, for example, in Rockhampton, sit above that sort of 2,000 households in the suburb, whereas West Rockhampton sitting well under 1,000, and it still has quite a high unique click rate per property that goes online on realestate.com. So if you are an investor, looking at this data really gives you some baseline as to suggest that demand is healthy. And as you can see here, the absorption rate sitting at 100% as well. So over the last 6 months, the suburb has had 13 listings, and it's had a total of 13 sales, resulting in an absorption rate of 100%. So anything that's going online there is being chewed up and swallowed by the market. So yeah, guys, West Rockhampton, if you are an investor looking to buy in Rockhampton in general with a lower budget, particularly under that $450 price point, this might be a suburb that I think you should potentially put on the radar. So West Rockhampton, guys, is the first hottest suburb in Rockhampton. Now, if I were buying a property in West Rockhampton, this is what I would be buying here. So 33 Media Street, West Rockhampton. It's currently under offer, but as you can see here, offers over $350,000. A 3-bedroom, 1 bathroom, 2 car. So offers over 350, that most likely would have pushed up to around that, I'd say 375, 380 as well, because a lot of agents are pricing their properties pretty low in Rockhampton as a bit of a strategy at the moment. So on average, most things are selling sort of 3, 4, 5% above asking price in most cases. So let's just run with the assumption that this sells for around that 375. So I'll be buying something like this, guys. So on a good piece of land as well, 848 square meters, so a great piece of dirt, and it's kind of like these older Queenslanders on stumps, but you can generally get these for under 400,000. That's probably the best value, I think, in the suburb right now, is these older homes that are sort of sub 450 in the suburb, because I think a lot of these are sitting on these really good block sizes, and they have a lot of wiggle room, I think, to push up in the short term as well, because they're coming off a relatively low base. The only challenge is finding the ones that are in rentable condition, where you don't have to put too much work into them, like you have to renovate it in order to get it tenant ready. So that's the challenge, is hunting around and finding those ones. Because what you'll actually find is the ones that are on the cheaper end of the spectrum in this suburb generally are the ones that need a bit of work. But if you actually have a look at the makeup of the suburb, so it has a bunch of different pockets. So it has a lower end pocket where most of the stuff like this sells between sort of 300 to 450. It has a mid-level pocket where most things sell between sort of 450 to 600, and then has a sort of an upper end of the market where things sell between sort of 6 to 800,000. I think the best buying still in this suburb is at the lower end. So if you can pick up anything between sort of 300 to 450, I think that's where the best value sits within the suburb. And I think a lot of these ones have plenty of wiggle room to push up into that next price bracket over the next coming year. So if you are buying in Rockhampton, guys, this is probably the specification you should consider. But again, take this with a grain of salt. This is my own personal opinion. And in fact, I even tried to have a crack at this one, but when I reached out to the agent, it was a bit too late. But yeah, this is what I'd be looking at buying, guys. Now, suburb number 2 is a suburb called Parkhurst. So Parkhurst, it sits on the north side of the Fitzroy River. So it's a northern suburb of Rockhampton, and it's one of the bigger suburbs on the north side as well. It's quite a big spread out suburb as well, with a bunch of different pockets as well. And as you can see here, it has a median house price of $670,000. If we looked at the suburb profile, it has around 1,300 households, has an occupied percentage of 72%, which is very good. It's a very family-friendly suburb. A lot of first home buyers also built house and land packages there in a lot of the areas where there has been a bit of new supply in the pipeline, hence why that owner-occupied percentage is also very high. Median rents are very strong in the area as well, now sitting at $500 per week. That vacancy rate hovering around 1% currently, and the yield based on the purchase price and the median rent sits at around 3.8%. But again, that's just based on those two metrics there, which is that median rent versus that median house price. There's plenty of cases where you can get a way better yield in this suburb buying a much cheaper property under that median, where you're going to probably also get much stronger rents above that sort of $500 per week as well. So take that yield there, that 3.8 yield, with a grain of salt as well, because on a case-by-case basis, you can get better returns definitely in this suburb. Now, some of the rationale behind why the suburb has performed so good over the last 12 months, it's had a median house price growth of 19%. So it's really surged along, and that's why it's been one of the hottest suburbs in Rockhampton. As you can see here, a 19% increase, and it's come off the base of 543,000. So it's gone from 543,000 up to 670,000 in the space of 12 months. And that median house price has surged by $127,000. So I think there was an article on this actually late last year, where Parkhurst was amongst one of the fastest growing suburbs across, I think, Queensland and even Australia. And it was captured by realestate.com, or Domain wrote an article about this. So as a suburb performing so good over the last 12 months, it's been one that's been up there amongst some of the best over, not over the last 12 months, but over the last 24 months, because I think the 12 months prior to the this 12 months, it's done some really good figures also. So yeah, look, Parkhurst, certainly one where you could have made a lot of money if you parked your money there 12 months ago. Best part of $127,000 in growth. But as you can see here, like the data on the demand and supply side is the reason what's really put upward pressure on those that median house price to grow. And as you can see here, 19 days it's averaging on market currently. So things are going under contract like that, right? Boom, boom, boom. And if it sits under 30 days, that's when a lot of people are actually offering unconditional contracts and cash-based contracts as well, because the average contract time frame in, let's say, Queensland is around 30 days. So when things start to get under 30 days, that's when there's a lot of cash buyers offering better terms and quicker settlement dates to expedite that under 30-day average. So 19 days there just goes to show a lot of buyers and a market where properties are flying off the shelves very fast. Stock levels very tight as well, as you can see here, 0.5% stock levels. And as you can see, relative to the suburb at 1,300 unique properties or households across the suburb, to have less than 1% of supply available at any given time just goes to show that from a supply point of view, things are very tight here. And the inventory levels now sitting at 1 month. So certainly over time, that inventory level has gotten tighter and tighter, and that stock has gotten tighter and tighter. And this is generally what happens when markets start to surge as well. People start to sit on their properties and go, ooh, the sales volume generally goes up, and then it starts to contract, and then the market starts to tighten. Supply tends to get lower and demand remains high, and that causes that sort of house price friction and puts upward pressure on the prices. And that's certainly, the data certainly telling us that here for Parkhurst. Has 945 unique views per listing on realestate.com as well. So not as probably high as what I thought it would get, but nonetheless, it's still very strong demand levels from all the people that are hunting around on those portals. And the absorption rate, very strong here as well, as you can see here, 170% absorption rate. So their listings versus the sales, the amount of listings and the amount of sales has superseded the listings themselves over the last 6 months, hence why the absorption rate is sitting well and truly above 100%. But basically what's happened is that over the last 6 months, the listing velocity each month has not been enough to sustain the demand of sales that have happened each month. So there might have been 10 properties coming on a month, but 13 sales. 10 properties, 13 sales. So over time, that sales volume is greater than listing volume. So what that means is that inventory pool gets smaller and smaller. I know, look, when you see sales volume greater than listings, you might think it's a mathematical anomaly, but in fact it's not. It has to do with the amount of properties available for purchase at any given month. So over time, there's a pool of properties that get pulled up. So let's say 10 properties come online this month and only, let's say, 8 sell, three roll over to the next month. So it creates this rolling pool. But what's actually happened here is that given that the sales volume has exceeded the listing volume, just started to dip into that pool there that's been built up over the last 6, 8, 12 months or whatever. So yeah, the absorption rate very strong in this suburb, and these are all the data, that point in time data, that suggests that the market is still very healthy and it still has a lot of wiggle room to grow. But as you can see, this is what's really caused that median house price to grow so much over the last 12 months, rounding out to 19%. I think Parkhurst is sitting at a $670,000 median. I think it still has a bit of wiggle room as well, particularly from a median house price point of view, to push up, because what we're actually finding is it has a really strong upmarket here. So properties that range between $800 to $1 million are the ones that are really doing the heavy lifting for this suburb and really dragging up that median house price. And I think as more and more of those sell, I think that's going to continue to put upward pressure also on that median house price. And as I alluded to before, it's actually a really popular family-friendly suburb as well. So it has a lot of kind of good family aspects to it, very desirable, and I think that over time, as well as what's put a lot of pressure on house prices there to push up over the last 12 months. It has a lot of good public amenity, has some really good pockets, has a variety of different stock within the suburb, and yeah, I think it's a suburb. If you can invest in here, at the price point that I'm going to suggest after this slide, I think you're going to really make some money here, guys, in this suburb, because it has a lot of good things going for it. The only thing you have to be concerned of if you are looking to invest in a suburb like this is that where Parkhurst is basically where a lot of the new land availability is in Rockhampton. So that's where a lot of the urban expansion is occurring. So it does have an element of the suburb where there's going to be a pipeline of new supply. So if you are an investor and that's one of your criteria, is to not be in an area where there's going to be a fluctuation of new supply coming on each and every year, because often supply tends to withhold capital growth, because when you have constant stream of supply coming into a suburb, that creates competition for your property and obviously creates less and less scarcity. So that can really have its impacts on median house price movements. So that's the only thing you probably have to be concerned about, is there's a pipeline of new supply happening in this suburb, because that's where the urban expansion is happening in Rockhampton throughout that whole Parkhurst corridor there as well. But yeah, a really good suburb here, guys, and one I think you should certainly put on your investment radar. Now, here's what I'd be buying in Parkhurst. So the good thing about Parkhurst is it has a variety of different pockets. So it has an upmarket pocket there where homes sell between sort of 800 to $1 million, and these are generally up to acreage size homes as well. But you get these big sort of 4x2 homes on an acre or a quarter of an acre, and they're really, really flash with big sheds, big yards, and they tend to sell at a really strong premium. And they often sell close to the river as well, where that pocket of Parkhurst sort of runs parallel to the Fitzroy River. It has a couple of really nice areas there with some high-end stock. And it has a sort of middle-end pocket where most things sell between sort of 6 to 800 residential properties that are quite well finished. So really nice stock that makes up a large portion of the market. I'd say that the majority of the stock in Parkhurst sits between sort of 6 to 800, and then it has this sort of lower end of the market here where things would sell between sort of 500 to 600,000. And for me, if I were buying in the suburb, I'd be buying in this lower end. I'd be buying between sort of 5 to 600,000, and I think that's where some good opportunity sits, particularly for properties where you're going to get that yield of around sort of 5% up to 6%, where you can keep under that $600,000 price point. And you can buy stuff like this still that's coming onto the market in and around Parkhurst. So this is a 4-bedroom, 2-bathroom, 2-car property on 668 square meters of land, and it only went on the market a couple of days ago actually for offers over 510. And for full transparency, I had a crack at this one for one of our clients, and we missed out actually. We put an offer in of around I think it was like 555, and we still missed out. But when I spoke to the agent, he said it was an owner-occupier buyer, and they've been looking for 3 years, so they paid some ridiculous amount for that property. I don't know what the figure was exactly, but it was well and truly above 555. But yeah, you could still get these 4-bedroom, 2-bathroom houses kind of around that where Woolworths is in Parkhurst, around that pocket, and you can get them under $600,000. These kind of nice, neat, tidy brick homes, and I think they'll rent really well, and I think they've got a lot of wiggle room to certainly push up into that sort of next price bracket over the coming years as well. But these ones are in very short supply. There's not many of these 422 bricks that pop up, and when they do, you've got to be very, very fast, and there's often a lot of competition. And if you can jag one of these off market, even better as well. We've jagged a couple of ones just like this one for clients over the course of this year as well in and around Parkhurst off market, and they've done really, really well. But yeah, guys, if you're looking to buy in Parkhurst, I'd certainly be looking at stuff like this. All right, the third suburb is a suburb called Wandle. So Wandle, for those that don't know where Wandle is, it's a south side suburb as well. So from the list so far, we've got 2 suburbs on the south side, and in fact, they intersect with each other. So Wandle intersects with West Rockhampton, and it also intersects with the Range. And you can see here that it has a median house price of $455,000. It's one of the it's one of the biggest suburbs on the south side as well, with 2,000 unique dwellings. Owner-occupier percentage is sitting close to 70% at 67, which is fantastic. That's what you want in a suburb. Some really good stability there. Rent's quite low relative to what we've just seen before in Parkhurst, at 500. This is 480 per week. The vacancy rate very tight here as well at 0.9%, and the yield for, let's say, the average rent and the median house price put together sits at around 5.4 as well. So not too bad from a rental yield point of view there as well. But again, similar to what I mentioned before with the other suburbs, you can certainly get better rental returns in the suburb as well. You just have to treat every property on a case-by-case basis, because you can get properties that might rent for $550 and above, and you can get properties around that median house price or over that median house price as well. So it's on a case-by-case basis there, guys. But Wandle, nonetheless, has been one of the hottest suburbs in Rockhampton over the last 12 months, and here's all the reasons why. So over the last 12 months, its median house price has surged along by 22%, so it's actually outperformed Parkhurst and West Rockhampton sitting at 22, and it's come off a base of $555,000, so it's made a total gain of $100,000 over the last 12 months. So $355,000 12 months ago, now sitting at $455,000. And look, guys, that median, it's come off a pretty low base at 355, and even now sitting at 455, I still think that's still a very cheap market as well, relative to I suppose what you can get in Rockhampton as well, and in that immediate area. So again, similar to West Rockhampton, Wandle does intersect with the range, and the range is one of the more upmarket areas, and it's still the best part of $100,000 cheaper still to live in Wandle versus living in the range. And in fact, that's what we've seen happen in and around Wandle as well. I've got a mate in Rocky that actually sold his house in Wandle in the range to go and buy a better house in Wandle because he could get better value for money there versus what he got in the range. So this is happening across the marketplace here in Wandle, where I think a lot of people see really good affordability in this market as well, because it has a lot of older established stock, particularly around that pocket near where the showgrounds are and where Wandle Heights is, which is quite a nice area of Wandle. And a lot of people see those areas as areas where they can snap up these older homes at a bargain, and they're putting a lot of money into them. They're renovating these older gables and Queenslanders, and it's really gentrifying that suburb as well. But I picked Wandle to be a really top performer going back 3 years, because I just, looking at the location, looking at sort of the proximity to amenity, looking at the demographic makeup, looking at real-time gentrification on the ground, I could see Wandle being a really good performer there. And we actually started buying investments in this suburb 3-4 years ago, when we could have got things under 355, and a lot of the properties that we bought now are sitting around sort of 500 and 455, so made 100 and 150 grand already, majority of those ones. But I still think this suburb has a lot of wiggle room to push up in the short term, guys. And by looking at the data here, the demand and supply side data, I think it's still speaking to that and still justifying a reason to invest here and a reason for this suburb to continue to surge along. So days on market sits at 30 days currently, so things are flying off the shelf there as well, and it's maintained this trend here for the last 9 months as well. So demand is high there. Stock levels sitting under 1%. 0.2 is as tight as they come. So I think the listing velocity is only like 1 to 4 or 5 properties a month coming in this suburb, and the inventory levels sitting at 2 weeks. So pretty much what happened: low levels of supply, high demand, stock levels have decreased, inventory pools gotten smaller and smaller. Inventory sitting at 2 weeks, so that means that once if all the listings dried up and the market became redundant and you only had to buy what was there currently on the market, that would all be cleaned out in 2 weeks. So stock levels here, supply levels are extremely low. So if we have low levels of supply and again high demand, that imbalance between the two creates that upward pressure on house prices. As you can see here, sales volumes again has exceeded listing volumes, resulting in an absorption rate of 135%. So there's been 39 listings and 53 sales. That's why that inventory pool is only 2 weeks now. I'd probably say over the course of the last 12 to 24 months, that inventory pool might have sat at around 6 weeks, but now it's gotten smaller and smaller down to 2 weeks because sales volume has exceeded listing volume. And that's resulted in that absorption rate, what we're seeing now. And if that continues to happen, guys, that just continues to put that upward pressure on house prices. And as you can see there, the last demand side metric we got there, which is the realestate.com views per listing. And look how high that is. That's even higher than Parkhurst, which is phenomenal, right? And that's much higher than what we saw in West Rockhampton. So that gives you an indication of how many people are searching in this suburb as well to potentially buy an investment or a home. So yeah, look, Wandle, it's been a really good performer. I called it a couple of years ago, but again, I still think it's got a lot of wiggle room to push up. So if you're an investor and you're looking at a suburb, I think, yeah, if you can jag a property in this market, I think it still has a lot of wiggle room to push up. Again, close to all of the really good amenity on the south side, neighbours some really good suburbs. Wandle, probably the only downside about Wandle is a bit spread out. The suburbs are a bit disjointed in a way. Like you got properties that sit on the riverside, sort of the upmarket area. You've got properties that are clustered around where the showgrounds is, where some light industrial is as well. And then you got like this sort of key residential area which is called Wandle Heights. I think if you can buy in around that Wandle Heights pocket, I think that's probably where the best pocket of the suburb sits, and I think that's where you're going to make some good money. Whereas the other parts of the suburb are very disjointed, and that riverside pocket is probably more for the discerning buyer that wants to spend upwards of around 700 and above. Whereas if you're investing, you probably want to keep it under sort of 550, and you probably can't buy in those pockets. And around where that light industrial area is, sitting where the showgrounds is a bit disjointed because it's industrial, commercial, and then some median density there as well. So there's a lot of units and apartments through there as well, which kind of breaks up that pocket up a little bit. So I'd be targeting that Wandle Heights area, guys. Now, again, how I mentioned, I'd be targeting that Wandle Heights area. So this property actually sits just coming into that Wandle Heights pocket, 63 Norman Street, Wandle. So you can check out that address and look at where that immediate pocket is. So 3-bedroom, 1-bathroom, 1-car on close to a quarter of an acre here. So 930 square meter block. And this was recently sold. So if I was buying Wandle, as I said, I'd be targeting that Wandle Heights pocket. And I'll be looking at stuff like this, like these older Queenslanders or gables, providing that they're in good condition, they make as really, really good investments, because what you'll find over in the range, these sort of properties are the ones that are selling for like close to $1 million now, particularly the ones that have been retrofitted and renovated, because they've got so much character. They're huge as well. They provide so much floor area. They've got really good aspects. They're built well. So providing you can find a good one that is rentable from the get-go and requires very little work to get it tenant ready, I think you're going to do quite well here. And majority of these older established properties like this, as you can see here, sit on really nice big generous land parcels as well. Like that's huge. And if you're someone with even like a granny flat strategy or the ability to battle axe out a secondary dwelling subdivision, even knock down rebuilds, these older areas on these larger flat blocks lend themselves to that sort of strategy as well. So I'll be buying something like this, guys, and in that Wandle Heights pocket. But if you looked at the different pockets of the suburb, as I said, along the riverside, you got this higher end pocket where homes sell between sort of 700 to $1 million. You got this sort of middle end pocket where most things sell between sort of 500 and 700, and you got this sort of low end pocket where things sell between sort of 400 to 500. I think the best buying for the properties that generally don't need a bit of work is between sort of 500 and 700. What I'm finding is the stock that's between sort of 400 to 500, you might need to spend a bit of change to get them sort of up to spec, to get a good tenant in there and get those desired rental returns that you seek. But yeah, have a look at this one, guys. That's kind of the type of properties that I'd be targeting. And unfortunately, if you're after brick homes, there's not too many brick homes in this suburb, because they're all sort of older established homes built sort of 40 years ago, and they're either gable or Queenslanders or cottages. Now, where we're up to, Frenchville. Frenchville in North Rockhampton, one of the hottest suburbs in the regional Queensland property market, I think, as a whole right now, in addition to it just being Rockhampton. So for those that don't know, Frenchville, so I mentioned a suburb called Parkhurst just before. It probably sits 3 to 4 minutes away from Parkhurst. No, I lie, probably 5 or 6 minutes if you use Norman Road. Not Yamba Road, probably takes you a little bit longer. And yeah, look, it's one of the bigger suburbs on the North Rockhampton front. And as you can see here, it has a median house price of $510,000. It has over 1,000 unique dwellings, so it's virtually double the size of Parkhurst, triple the size of West Rockhampton, and double the size of Wandle. And has an owner-occupied percentage, despite it being so big, sitting at 74%. So 74% of the 4,000 dwellings are owner-occupiers, and that provides really, really good stability. And that's why it's probably been one of the more popular suburbs in Rockhampton, not only for owner-occupiers but also investors, is because of that owner-occupied percentage. Median rent's at $550 per week, so very strong rents you can get here in Frenchville. That vacancy rate currently spiked a little there, up to 1.5%. It was hovering around that under 1% for a long time, but it's only just recently spiked. So if you are looking to invest, just keep an eye on that vacancy rate trend. And if it gets any higher, that can be a bit of an issue, particularly around additional competition. If you buy a vacant property and you don't have a tenant in there, and there's 20 other properties that look exactly like the one you bought that's going on the market, then that's a little bit of competition, and I often don't like that. So that's something to keep an eye on, guys. That yield based on the median rent and the purchase price rounds off to be around 5.6%. So that's a pretty solid yield there all around there as well. And as I said, each property is on a case-by-case basis. Like, we bought a property in Frenchville last month for a client, and it's renting for $620 per week, and we got it for $530 from memory. So, and that yield was a lot stronger than 5.6%. So, just treat everything on a case-by-case basis. But from a yield perspective, it's a very good suburb nonetheless. So yeah, it's been one of the hottest suburbs, as I said, not only in regional Queensland, but not only in Rockhampton, but also regional Queensland. And it's had a really solid last 12 months, but even the 12 months prior, so the last 24 months has been very, very solid. And it looks like it's just kicked on for the last 12 months as well, because it's done really well over the last sort of 2 to 3 years. And it's been a very popular market for investors and home buyers. And as you can see here, over the last 12 months, it's surged by 22%, and it's come off a base of $398,000. So it's made a total gain of $112,000 over the last 12 months, which is ridiculous, right? That's a lot of change there that's been made, and a lot of growth that's happened in this market over the last 12 months. And look, I was buying in Frenchville going back 4 years when the majority of the stock there was, around that 350, 400,000. And now a majority of the properties in the well-located pockets that we bought for around 400 are now like kissing $600,000. So the market's definitely had a lot of growth. And if you are someone that's probably had your eye on a suburb, then you have to just be wary that this one has accelerated a lot over the last couple of years. But from what I'm seeing in this suburb, there are still pockets where you can still pick up some good deals. I think there's still some pockets, there's still some bargains in and around the marketplace, but I think you've got to really hunt around there now. But I find that a lot of the stuff now that's kind of $550 and above, particularly the 3-bedroom, 1-bathroom properties, a lot of them are overpriced. And it's very hard to find a good deal in Frenchville now. I know that for a fact because I'm always searching for property in the suburb. But if you can find like a good, decent property that's a 3x2 on, let's say, 600 square meters, that's turnkey ready to go, under, let's say, $520, I think you're buying well there. But majority of the stock there now, the well-located ones, are pushing up above that $550 now. So it's very hard to find a deal there. But anyway, look, all the data suggests that, the market probably still has a lot of steam in the engine. So maybe do not get too concerned or wary about the market growing as much as what it has over the last couple of years. But it's certainly something to keep an eye on. But look at all the point in time data here. It still suggests that it might just continue to surge along. So stock levels 0.2. So that's very, very tight. Inventory sitting at 2 weeks. So very, very tight market here from a supply point of view. And look, 4,000 dwellings, but to only have 2% supply levels that's ridiculous. And the market's just become tighter and tighter there. And look, what happens, guys, is when suburbs start to go through these sort of hot phases, is vendors themselves, like, even though they want to cash in and sell their properties, is like, where do they go even? So there's not really too many options, because they could sell at a premium, but then they buy back into a premium. And if they look to rent, then there's not many options on the rental side. So the market just becomes tighter and tighter, and stock levels start to really contract. And as you can see, that's certainly happened here, despite it being a larger suburb with heaps of available households for purchase. Days on market, 28 days, and it's maintained that trend over the last 12 months. And if we actually backdate that, it's probably maintained that trend for the last 24 months, to be honest. And things have been selling very hot here for a large period of time. So that just means if you are looking to potentially buy in Frenchville, got to be pretty fast. Things are being snapped up by buyers very fast. So, proceed with caution. The absorption rate here, 156%, and the sales volume has exceeded listing volumes here again, resulting in that over 100% absorption rate. So again, demand is very high, supply is very low, and if we look here, it's probably the hottest in terms of what we've seen to date with the online search rates on realestate.com. So 1,300 unique buyers per property. Look, guys, that doesn't mean that there's 1,300 people looking versus one house versus 1,300 buyers. It's an indicative amount, but nonetheless, it shows that there is healthy demand levels or search levels, and you can use that as a bit of a gauge to measure and temp check whether that market has strong demand. And we always use that online search interest data as a bit of a gauge. But yeah, guys, Frenchville, very good suburb. It's beautiful, has a lot of leafy green areas, has a variety of different pockets from elevated homes up on the hill with a nice mountain outlook. You've got some that sort of sit on flat blocks. You've got properties that range up to $1 million. Properties that sell on the lower end, as low as $350,000. So it's a big suburb with a variety of different pockets, and this is where you have to nail the suburb level pocket, street, and property, because it's so big and so spread out and has all these different stock levels, different pockets. So I think if you nail the street and then the house and the pocket, you're going to put yourself in a better chance to get better long-term performance in terms of capital growth and premium rents there as well, because that suburb is very big, and if you're buying in the wrong pocket and you're paying the wrong price and you're buying the wrong property, you're potentially leaving money on the table there, guys. But it's a really good suburb, has a really good school, some really good public amenities, some walking tracks, hiking tracks, bike tracks, parklands, making it very popular for families as well. So, not too far from the city centre itself, not too far from Stocklands. It's got a lot of really good things going for it. Frenchville, and the great thing about Frenchville, unlike Parkhurst, is that it doesn't have any supply threat. So, completely built out and established suburb now that doesn't have the ability for any new supply to come in the pipeline. So, if you can target those pockets that are even more scarce at a suburb level, like within the suburb of Frenchville at a pocket level, not suburb level, then, with no new supply threat, then that area just becomes more scarce, and over time, that's what can really push up that value of the property that you propose to purchase. So that's one really good thing that I like about Frenchville there as well, guys. And it has one of the best primary schools. That's a public school in Rockhampton itself, and the only people that can attend that primary school are people that are in the school catchment. So a lot of people want to rent in that area and want to move to that area to be associated with that primary school there as well. But Frenchville, very good suburb here, guys. Has run away from a lot of people. I don't think finding good value there is hard, but nonetheless, I think if you can hunt around and find good deals, you're going to do really well in this suburb. Now, as I said, good deals are hard to come by in this suburb. You've got to really hunt around. And as I said, if you can jag something under 520, that's similar to this one here. So this one was recently sold for $500,000, a 312 on close to 600 square meters of land, Lawrence Avenue in Frenchville. This is where the value is, I think. But often these ones are hard to come by, and often a lot of these vendors and agents have unrealistic expectations, and you'll find majority of the stock that might be similar to this is selling above 550,000, or the price expectation is for it to be above 550,000. But if you can find stuff like this for under 520, I'd be buying it, because these properties they're very well located. They've got the dual living, particularly the ones with the brick base and the hardy plank on the top. They're generally 3-1s in configuration, but you can often get a 3-2 there. And if you can jag the ones that even have legal height downstairs, you're going to do really well, I think. But yeah, you have to really shop around for these good deals. We didn't buy this one, but we bought a couple of ones that were similar to this for around that, 510, 520 as well. But yeah, if you probably got a budget above 550, then you could potentially look at buying maybe the other stock. But again, I think a lot of those are overpriced, and I'd be probably looking at other suburbs where you could probably get better value for money, particularly if you're going to get something like this for around 550, whereas 550 could probably get you something nicer in Parkhurst or something nicer in another suburb of Rockhampton or even another suburb in regional Queensland for that matter. But look, guys, overall, Frenchville is a pretty blue chip suburb, and it's got a good track record. It's got a good demographic makeup. It's got a lot of really good public amenity. It's one of the nicest suburbs in Rockhampton, and as I said before, it's big in nature, but it also when it's big, it has a variety of different pockets as well. So it has a lower end pocket where most things sell between 400 to 500. It's hard to find deals in there in that category now as well, and often find the deals that sit within this category are the properties that need a bit of work. Like we've been showing so many properties in Frenchville over the last month from agents that are all between sort of 400 to 500, but they need at least $20,000-$30,000 worth of renos done on them. So I think the best buying at this stage is between that sort of $500,000 to $700,000 pockets, because none of those sort of deals, I think, within that price point require the work that's required for this lower end market now, because a lot of the good properties that were 400 to 500 are now in the $500,000 to $700,000 bracket because they're pushed up over the last 24 months, and now a lot of the stuff that was in the sort of 200 to 300 price bracket is pushed up into this 400 to 500 now, and yeah, the stock level's not that great. And then obviously, yeah, this higher end of the market, very upmarket area, a lot of $1 million homes, beautiful outlooks of the mountains, and yeah, if you can get close to some of those pockets, very hard to buy close to those pockets. Yeah, you're going to probably do really well. I find you can get close to where a lot of this pocket is around where the Frenchville State School is. Probably could still buy like a $550,000 home that's surrounded by these $1 million homes. I bought a lot of properties that were around between $400,000 to $500,000 a couple of years ago that were on the same streets as these $1 million homes. And now all those properties are like $600,000-$700,000. So you can still buy, but you got to hunt around, and often it really drags out that search window. And if you're willing to wait, then you can potentially get a good result there. But yeah, those good deals are really hard to come by. But if you can buy, I say in and around where Frenchville State School is, you're going to do really well. And if you can buy on the opposite side of Thoset Road, so the east side of Thoset Road, up around that elevated pocket of Frenchville, I think that lends itself to some of the more upmarket properties, and you can still get some really good sort of $500,000 to $700,000 properties within that pocket as well. So yeah, guys, that's what I'd be buying, and that's what I'd be looking at doing if I was buying in Frenchville. All right, the number one hottest suburb in Rockhampton right now is a suburb called Coongill. Now, Coongill is located on the north side of Rockhampton, and it actually neighbours and intersects with Frenchville, the suburb just previously discussed. And yeah, there's a really good correlation between the two as to, I think, why Coongill has done so well. I'm going to explain that shortly. But yeah, Coongill, right next to Frenchville, has pretty much all the same sort of lifestyle drivers, access to amenity as what Frenchville does in some cases. Same commute time to the CBD, same commute time to a lot of the job hubs, same commute time to a lot of the big retail hubs in town. And yeah, it's very much a lot more cheaper, as you can see here. So it has a median house price of $385,000. It has roughly 2,000 households, so slightly smaller than Frenchville, or half the size of Frenchville. Owner-occupier percentage is sitting at 64%. Median rent at $460 per week. Vacancy rate at 1.6, so that's something also to keep an eye on there, guys, that vacancy rate and the yield at 6.2. So probably the best yield out of the suburbs all discussed today. But as you can see, the rents are pretty strong relative to that low purchase price. Hence, that yield is so juicy there. So altogether, we've got 3 north side suburbs in Coongal, Frenchville, and Parkhurst, and 2 south side suburbs in West Rockhampton and Wandle, making up the top 5 list. And Coongal has just seemed to outperform everyone over the last 12 months, because as you can see here, it's had a median house price surge of 27% in the last 12 months. So it's risen from 881,000 to 385,000, resulting in a total gain of $104,000. So as you can see, they're coming off a really low base. So Coongal, the reason why it's come off a fairly low base there is that prior to, the last 12 months, it's the market that's really picked up now, but it's been predominantly known as a lower socio-economic area of Rockhampton. So that's really hampered its ability to perform over the long term, and it's only really now going through a rapid growth phase. And it's also been a suburb that's been subject to flooding as well. So despite it being sort of ripe for investment right now, if you are looking to buy in this particular suburb, or you're looking into investing in this particular suburb, you have to be mindful that this is a suburb subject to flooding, and it is a it is a suburb subject to having a poor track record because of the demographic makeup there, also being by and large lower socioeconomic. But look, guys, I think the reason why it's done so well over the last 12 months is that it's been so affordable, so cheap. So a lot of people that have been sort of priced out of some of these more expensive markets like Frenchville, like Norman Gardens, have looked at Coongal as a potential option. And I think a lot of investors have also really come in to this market and really propped it up a little as well, because they've really gone in and targeted these sort of lower base, cheaper properties, and really inflated that median house price over the last 12 months. And now sitting at $385,000. Look, that's still cheap. I think that suburb still probably has a bit of wiggle room to grow, but I think only in certain pockets, I believe, you'll make money here. I don't think across the whole suburb, if you were to just buy any old property in Coongal, I don't think you're going to make money. I think you really need to be very specific with where you buy. And I've got a really good example of a property I just recently put under contract that I'll show you next, which is a property I think that you should try and target if you're looking to buy in this market. Because, yeah, as I said, a lot of these pockets of Coongal are subject to flooding, and a lot of pockets still have a large clustering of lower socio-economic demographic that can really hamper your ability to get good quality rental returns and to get really good capital growth over the long term. But yeah, still feel a very affordable market. But can it push up? I think yes, the market can continue to push up, but only in certain pockets and on a property by property basis. I think is where you need to be. How you need to be investing in a suburb like Coongal. But as you can see here, all the demand and supply side data looks terrific, even to suggest that the market is going to continue to rise over the next 6 to 12 months also. So days on market currently sitting at 22, so well under 30 days. Things are flying off the shelf there, and it's maintained this trend for the last 18 months. So when properties are selling so fast, that often means that you're in a multiple offer situation. So when there's multiple bidders per property, they're all fighting over it. So generally then the property goes to the highest bidder, and majority of those bidders are offering over and above purchase price. And that when that happens at scale, that continues to really push up that median house price. And that's certainly what's been happening here in Coongal. That absorption rate sitting at 67%, which isn't great, but overall, nonetheless, the absorption rate is healthy. Really, you want to see an absorption rate up around that 80%, but nonetheless, the stuff that has been selling has still been selling well for that median house price to push up, because generally with a median house price surging so much around that 27, you'd probably want to see an absorption rate over 100%, but in this case, sitting at 67 is still okay. So it's had 35 listings and a total of 42 sales in the last 6 months. So It's still got an inventory pool there, I can imagine. I haven't noted it here, but I can imagine that inventory pool will be sitting at around that 1 month mark if the uh, listing volume has been greater than the sales volume. That means that the inventory pool is still big there, so it hasn't resulted in an absorption rate. The absorption rate hasn't been as high as a result. So yeah, the online search interest rates on realestate.com are also very strong here as well at 986 unique views per listing. So all the demand and supply side data again suggests to me that this market still has a bit of steam in it, but as I said before, it's a lower socioeconomic area, it doesn't have the best track record. A lot of the suburb is subject to flooding, so if you are looking to buy in a suburb like this, given its performance over the last 12 months, you have to navigate this market with extreme caution because, yeah, you could buy here and it can go wrong here pretty fast if you were to buy the wrong property, particularly from a flooding point of view or just being in an area where you're not going to get any growth and not going to get any good rental returns. But nonetheless, yeah, Coongill, as I said, I think the reason why it's done so well is I think a lot of investors have come in and really propped up this market. But at the same time, a lot of people moving in for that affordability, buying in sort of the non-flood areas, the kind of nicer pockets clustered away from where sort of the lower socioeconomic demographic is. Hence, and that's what I think's really driven this market forward over the last 12 months. But yeah, I'm going to go through an example now as to where I think and what you should be buying in this suburb. Now, as I said before, you need to be navigating the Coongill suburb with extreme caution because, yeah, not all properties are created equally there. And, yeah, things could go south pretty quickly if you buy the wrong property, particularly in this suburb. But if you buy the right property like this one I'm about to show you, I think there's a lot of upside potential. So I bought this property here. I just actually put this on a contract 2 weeks ago for $485,000. It's a 3-bedroom, 1-bathroom, 2-car property on close to 700 square meters of land, no rear neighbors. And where I bought this property was in Coongill, but it's in the pocket where Coongill intersects with Frenchville. So literally, this street was called Bloxham Street. So on one side of the road is Coongill and the other side is Frenchville. And if you can buy in and around, I think that pocket lends itself to some of the best value properties in Coongill and some of the best stock in Coongill, because what you're really doing there is you're still actually clustered amongst kind of the well-located properties or the well-located stock, the nicer stock in Frenchville, but it's just you cross an invisible line and you enter into Coongill, and this same property, if it had a Frenchville postcode or address on it, I'd probably be paying an extra 50 grand for it, but I got it well and truly under 550, whereas this one, if it was Frenchville, I would be paying around 550 for it, but I got it for 485. So I think where Coongill and Frenchville intersects, if you can target that pocket of the suburb, I think that's probably where you're going to get some really good investment properties here. And we targeted this really nice street, ends on a cul-de-sac, no rear neighbors, big block. The house is fully built out underneath as well with a kitchenette, rumpus space, and then upstairs 3 good-sized bedrooms and all open plan with a deck looking out towards the back as well, which was a nice aspect. So yeah, if you can target properties like this, I think you're going to do really well in Frenchville. But nonetheless, yeah, you got to get the dwelling right because it could go wrong pretty fast. So if you look at the pockets of Coongill themselves, so they've got this lower end pocket where most of the stuff sells between sort of 300,000 to 400,000, and most of these properties are subject to flooding, so that hence the lower price point. And they're generally harder to sell and harder to rent as well, and they rarely go up in value as well. So I would be avoiding those sort of properties. I think there's some good buying in between sort of 400 to 500 still as well, but I still think there's a large cross section of those properties that still might need a little bit of work. And then if you can buy stuff like what I've probably bought here, which is between sort of 5 to 600,000, I think you're going to do pretty well where it intersects with Frenchville. And you can probably even buy stuff like this still around that sort of 460, 450 even. That's a Coongill address closer to this pocket where I bought this one for. I think if you can do that as well, I think you're going to do pretty well all around. But Yeah, guys, Kerngle, despite it being the hottest suburb in Rockhampton, I think it's one you need to navigate with extreme caution. And yeah, I'd be targeting stuff like this if I was looking to buy again in Kerngle. Woo! All right, family. Look, if you've stuck with me all the way to the end, thank you for hanging around. Overall, I really hope you got some value out of that, to be honest. And I really hope that it's going to help you along your journey. And best of luck with it all. And that last example in Kringle as well, guys, that was an off-market purchase. So yeah, if you need help, we jag a lot of those sort of deals as well off-market. My name is Troy Simbassini. I'm the owner and lead buyers agent of Capricorn Life Buyers Agency. It's one of our subsidiary brands under the Life group of companies. If you feel as though you need help navigating the marketplace, regional Queensland, central Queensland, all of those areas just there mentioned, give us a call on that number. Visit us on that website. And as I said, we jag a lot of things off market. And we tend to, outperform the market. That's our promise and offer to you as well. We can get you a better result if you were to DIY it yourself. And I can show you all the examples of how we do that and the results that we've gotten, and yeah, really walk you through our service scope and process. And also to remind you that if you don't need our buyer's agent services at all, and if you go ahead and buy in regional Queensland, we are going to be launching our asset management division shortly as well. So we'll have the ability to manage your asset for you as well. And trust me, we're going to do a way better job than all of these agencies that treat property management as second fiddle. They're all really concerned about, their sales arm, and they pay little attention to, the property management side. Hence why we're starting it, because so many of our clients have been frustrated with the services they've been getting, and we're going to position ourselves into this space now and deliver a really good quality service. So yeah, guys, if you fall into that category, feel free to reach out to me and the team as well. We'll put you on our wait list, and we'll get your property rolled over to us in due course. But thank you for tuning in, guys, and I'll see you on the next video. Cheers.